Hey guys, welcome to the Trade Genius Podcast. Bob and Phil here, as always. Guys, we got a doozy of a signal for you. Happens every 2 years, and it's going to happen this year on January 20th. We're going to talk about exactly what it is and what it means for your portfolios. Let's dive in.
Trade Genius.
Hey buddy, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Just promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
Hey Bob, so we're kind of in that holiday trading mode and complacency abounds.
Yeah, this is a pretty wild chart. So, the market is boring us into complacency right now, and everybody's basically, Santa is a given, although it may not be. It might be an interesting week yet. But I think pretty much everybody's concluded that the 1st of January, there's too much flow coming into the market. So everybody's like, well, when's this going to end? Well, every 2 years, Phil, if you want to throw this chart up, you get a situation where the contracts between January and February, March for volatility goes into backwardation. And when it goes into backwardation, you get what backwardation means is that the current contract on the futures market is higher than the contracts out the next month or two. And it creates a situation where it throws off the number of things for, the buy side of the market, and usually throws us into a market sell-off. And so, people have been hearing, Jam Croissant and other people talking about, we're going to have a strong first half of January, and then we're going to go into this window of weakness that could be pretty severe. Well, here's mathematically showing you every 2 years, it seems like the volatility traders are on a clock. And they do this massive backwardation in VXX, which is a short volatility trade. And you could see it. We had one in 22, 2018, and I went back and looked further. We had one in 14, 12, and 10, but not in January. So we had a situation here where they got this thing on autopilot right now, and it looks like probably an opportunity for some mischief coming out of that January contract. I think the January contract is the 17th, is the end of the contract. So January 20th doesn't mean January 20th is the day the market blows up. It just means January 20th is you're setting a low in the short-term VIX contracts for potentially a month or two. And that dovetails to what we've been saying all along, Phil. Stay long to mid-January, then out to Easter, it probably looks pretty weak. And then probably we're going to have another bull window in April, a sell-off, into June. Then, you get the summer doldrums, and then I can't even predict the fall because there's going to be so many cross currents.
Yeah, there's another chart too of the put-call ratio. I don't have it up, but if you were to see where the readings were, it's right alongside where we've had previous readings back in, say, July of 2023 and February of 2023. And those were both all areas where we ended up hitting into an area that we ended up rolling over on. So what can we expect? I wouldn't expect anything this week or even next week, but as we progress toward that January OPEX that you mentioned, I think that you could easily see somewhere in the realm of 1 to 200 point pullback. I mean where we've come and the speed in which we've come, and that wouldn't even really give you a good bearish case if we got that. But if you're trading these markets, especially if you're in options and things like that, that's a significant move that you do not want to be buying beforehand, going into calls and things like that when this thing could be brewing. But I do think that, especially if it's a prolonged pullback, which, again, because of the move up that we've had, it could be a multi-week pullback. And so if you do get something like a pullback into March, I think unless things are really falling off the cliff here in the economy, I think that's probably a decent buy opportunity going into June.
Yeah, and we looked a couple of weeks ago, we looked at the open interest and where some of the activity is. And, when you see open interest falling off, in certain weeks, then you can expect some weakness, that week coming. And there's a big fall off between basically the 17th and the end of the month of January. So I think there's a good short-term trade. And, for people to say, although this can't happen, we had a sneeze last Wednesday that drove the market down 60 points in 3 hours. So don't underestimate the ability to have a downdraft that could be 200 points over 2 or 3 days. It could still be in a raging bull market, but it will wipe out everybody who's leveraged. And that's what they like to do. So I thought we'd share this with everybody today, Phil. And there's some really interesting data points coming up. And, any moment Ezekiel 38 can happen out in the Middle East. So then all bets are off in terms of energy prices and shipping and things of that nature. So, in fact, I heard 2 hours ago there was another Red Sea attack. I think Iran lost one of their top generals. You don't know what kind of playback. And the thing that gets me most worried, Phil, is most everybody's been playing in the Middle East sandbox. And I'm not too sure when somebody's going to try to go outside that sandbox and try to prove a point. And I think nobody's expecting that. I think, being in the military myself, I always just cringe when people talk so boldly. You have no idea what you're asking for, especially if somebody does something asymmetric on your soil, like what happened in 9/11. You kind of get pissed off because you're like, hey, this is like a video game for us. But they hit the right thing with the right target at the right time. It'll totally disrupt economic activity. And right now we're having issues. The Red Sea is struggling, the Suez Canal is struggling, Panama Canal is struggling. So, there's choke points here. And then you got Turkey agitating too. So there's a lot of places where mischief can affect economic activity that can affect this ball of wax we call the bull market right now, Phil. So it's going to be really interesting to watch. I'm telling everybody who listens to me is if you had a great run, and I've had a great run, I want to be safer and safer and safer. So I'm moving to more dividend stuff, staying heavy in energy. I'm getting rid of speculation. I'm buying more bonds. I added TLTW to my TLT. I added USOI to all my energy positions. And I'm just trying to buckle down, getting ready for rough sailing here, over the next 3 to 4 months.
All right, guys, well, let us know what you think on this and if you're getting defensive in your portfolios going into January. I'd love to hear about it. Post your comments below. Also, check out our specials over at tradegenius.co. We'd love to see you in the room. Bob and I are navigating the markets, and we can help you through what should be a very interesting 2024. All right, guys, thanks for watching. Please hit like and subscribe, and we will see you guys on the next video. Take care.
Trade Genius.